Hello and welcome back to How About That Crypto, your home for regular crypto and Web3 news and updates with your host, Bitcoin Stylist. Today's news and update is by far the biggest news of the year. Bigger than the partnerships of Disney, DraftKings, and Mercedes-Benz with Polygon. Maybe even bigger than the deal, maybe even a bigger deal than the executive order. The FASB has declared that companies should use fair market value when accounting for crypto on their balance sheets. What the heck are you talking about, Robert? Not to worry, I'll explain it all. But first, like, subscribe, follow, comment, support me. It helps support the channel, and I really appreciate it. And it also helps to make sure that this content is being circulated, which is what we need to be happening and why I started the show, because we have a lot of a fight to do still when it comes to making sure that politicians and banks don't squash this industry. So be active and create your own content, and also spread this other people's content around. Okay, and don't forget, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. Okay, so if you've been watching my channel, you would probably know exactly what I'm talking about. The FASB is the Financial Accounting Standards Board. And so, okay, so you probably, if you pay attention to the financial markets at all, you probably heard, oh, quarterly results coming in. What are the earnings reports for Apple? Oh my gosh, they didn't sell enough iPhones. So those reports that these companies have to put together, they have to put together quarterly reports and an annual report on their earnings, their risks, and all kinds of other information that you need to know if you're going to be an investor, so that you have all the information so that you can make your decisions. So the SEC regulates publicly traded companies offering of stocks, and in order to stay in good standing with the SEC, you have to file financial reports. Those financial reports all have to use the same accounting standards, because how else are the feds going to audit you? They need to know exactly what your, how to read your financial. Imagine if, everyone did their own accounting, like wrote these forms out in a bunch of different ways. And then the regulators have to go through and figure out, well, what did you mean by this? And why did you write that there? Instead, they said, no, everybody has to use the same accounting, the same report. The reports all have to look the same. They have to be standardized. So they ask the FASB to write the standards for that they adopt and make all the publicly traded companies use those standards. An example is that pertains to crypto is MicroStrategies is a company that is owned by Bitcoin Maxi. What's his name? Oh my, Michael Saylor. Oh my gosh. It's early and there's a lot going on and I gotta get out of here. So I'm like a little bit of a rush this morning, so I'm sorry. So anyway, Michael Saylor had been talking about this because the okay, so MicroStrategy is a publicly traded company. They sell software and enterprise solutions and probably some other stuff that I don't know about. Well, they have to produce their reports just like all publicly traded companies, and they own a bunch of Bitcoin. They own the most Bitcoin than any one entity, as far as I know, owns over 100,000 Bitcoin. Well, when the value goes down, they write the value down, just like if you are I don't know, if you're Walmart and you own some of the stores, you don't just have a lease. I don't even know, do they even lease any of their spaces, or do they own them all? I feel like they must lease them. Anyway, so they have a lease, or sorry, if they own property and the property market drops, they have to write the value of that warehouse or whatever they use down. So, but the difference is that when the value goes up, they can't write it up because of the current financial standards. So what the crypto industry has been doing is asking the FASB to do the research and write new standards for crypto and look at it at more of like a financial asset, something that both goes up and down. So a good example of this is when the market went down and then it went back up. There was like one quarter where MicroStrategies value was actually higher than what they said on paper because of these accounting standards. Basically, the drop in value of Bitcoin caused them to have to write the value of that Bitcoin down. But then the next quarter, the Bitcoin went up and they couldn't write it up. So on paper, they looked like they were worth less than what they really were because they had this Bitcoin that if they had sold it, then they would have had a lot more cash in their pockets than what the paper said based on these accounting standards. Okay, so I'm going to jump into sharing my screen. If you're listening on podcast, you can use the links below and follow along, or you can just listen up. All right. Let's see how. Okay, so we have an article here by Jennifer Williams Alvarez in the Wall Street Journal, and it's titled FASB settles on fair value accounting for measuring crypto assets. The method would allow companies to recognize losses and gains immediately. So I'm going to read the first two paragraphs here. The Financial Accounting Standards Board on Wednesday said companies should use fair value accounting for measuring Bitcoin and other crypto assets, moving a step closer to a standard that could clear up uncertainty over reporting how much holdings are worth. There are currently no specific accounting or disclosure rules for cryptocurrency assets, so businesses classify them as indefinite-lived intangible assets, similar to intellectual property such as trademarks or URLs. I own Tesla.com. What is that worth? Companies must review the value of such assets at least once a year and write it down if it drops below the purchase price. If the value rises, companies can only take the gain if they sell the asset, not if they continue holding it. And then we also have a quote here from the FASB. One of the board members said, "We've heard from investors that they want transparency through disclosure, and the only way to get it is fair value." So people want to have these disclosures of what their holdings are worth. Like how can I invest in a company if I don't know what they're really worth? And then they have this like ghost value in there that is not being able to be realized on paper. So this is really, really big news. And the reason this is big news is because no publicly traded company other than people who really believe in it, if you want to just buy some Bitcoin and you were a publicly traded company like, I don't know, ExxonMobil, if they wanted to hold Bitcoin on their balance sheet, they wouldn't do it, because if the value goes down and then goes back up, it's going to look bad on their balance sheet. So it makes sense that more companies would be willing to put crypto on their balance sheet and hold it if they can write the value up and down as the price fluctuates. So I'm going to read these last two paragraphs here. The FASB in August detailed criteria for assets it will include in its current cryptocurrency project, leaving out non-fungible tokens and certain stable coins. The board will next consider what will have to be included in disclosures about the assets and how companies should inform investors. The two topics will likely be discussed by the end of the year, according to a FASB spokesman, and the board would then vote on whether to issue a proposal. He declined to comment if that might occur. Okay, so basically this is saying now companies can go ahead and buy crypto because you aren't going to be basically getting the shaft or getting screwed over by the accounting methods like MicroStrategy's did. So MicroStrategy's stock took a hit because when those financial reports came out, they're like, oh my gosh, all those losses. But really, the reality is they actually had gains and they were worth more. But on paper, people are just running those numbers. And then, all right, so let's move on to the next article. And this is by Mark Maurer, and it's on the Wall Street Journal. It's titled FASB excludes NFTs, some stablecoins from crypto accounting project. Popular digital currencies like Bitcoin and Ethereum would be included in the U.S. standard setters effort towards clear accounting rules for digital assets. NFTs are pervasive or material yet, or they are not pervasive or material yet, whatever that means. Okay, so let's jump in to this article. I'm going to read you just a few paragraphs here. Let's see. Okay, so here, where is it? Okay, NFTs are by their definition non-fungible and may carry rights to underlying goods services, or other assets. And certain stablecoins are intangible assets. Popular crypto coins such as Bitcoin and Ethereum would fall within the rules scope. FASB board member Susan Cosper defined the exclusion of NFTs from the project, saying they might slow it down. Sorry, it says she's defended the exclusion. It's not pervasive or material at this juncture, she said, referring to companies' investments in NFTs. It's certainly something that we can focus on later if need be. Given the exclusion from the project, accounting for NFTs and certain stablecoins will likely remain a headache for the companies that own them. Those that do general accounting for crypto as indefinite lived intangible assets comparable to website domains and trademarks based on non-binding guidelines from the Association of International Certified Professional Accountants. Okay, so basically this is just, a follow-up of the last article saying NFTs aren't included. I guess that's not really that important unless you're a big NFT person, but really why I think this whole thing is important, this whole situation in accounting, is because why would a company want to hold crypto if they're just going to get screwed out of on their paperwork? And we all know that those those financial reports are really how you make decisions on investments. So it's not realistic to expect an investor to try to dig into your paperwork and then figure out what the value of your Bitcoin holdings are, and do the math to determine what your actual value is. Like, investors are supposed to be able to just look at your report, trust your report is being done correctly, and if it's not, then hopefully the regulator does their job and catches it through some sort of audit or something. I don't know. And you got to be able to move quickly, like sitting in and think about it. It's like, oh, okay, MicroStrategies, I can read over their financial reports, even though it doesn't reflect its true value. So now I got to go in and figure out the true value is. And it's not who's going to do that? I don't know, except for if you're like a person trying to get exposure to Bitcoin at a discount, maybe. Okay, so I found the official statement from the FASB board, and it says accounting for and disclosure of crypto assets. The board discussed how entities that hold crypto assets within the scope of this project should measure those assets. Measure crypto assets at fair value using the guidance to topic 820 fair value measurement. Recognize increases and decreases in fair value and comprehensive income each reporting period. So they're just basically saying what we've been saying is now crypto on a balance sheet of a publicly traded company can both be measured down when the value drops and you can take those losses, and back up when the value goes up and you experience gains. And it also says they're going to recognize certain costs incurred to acquire assets such as commissions as an expense unless the entity follows specialized industry measurement guidance that requires otherwise. So that's awesome, because I want to know that I can write off all my charges that I pay for that. Although most platforms are now doing free except Coinbase, so I can just write those expenses off, which is nice. Okay, so and I also want to scroll all the way to the top. It does say tentative board decisions, and it says tentative board decisions are provided for those interested in following the board's deliberations. All the reported decisions are tentative and may change at future board meetings. So I will just try to keep an eye on this, and hopefully this continues forward and this happens. So anyway, that's the news. That's the big news of the day. I think that's the biggest news of the year, personally. And if you've been watching my channel, I said I thought that the biggest thing ever, the biggest roadblock we have is this accounting rule. So now that this accounting rule, once it's solidified, and not just a tentative decision, but once it's solidified, this could be a huge boon in the next bull run. So watch for companies accumulating cryptocurrency post solidification of this rule, and see. Well, I guess we'll just wait until see what happens with MicroStrategies and Tesla, who own large amounts of Bitcoin, and we'll see how once they change over their accounting, then I think it'd be safe to say that this is solidified. But I'll also watch for an official decision to say that this is solidified. But anyway, This, I think, is the biggest news. Do you think this is the biggest news? Is there other news that you think is bigger? Let me know. Leave a comment below and have a good day and hodl on.